Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled The Key Numbers to Know for 2024. Mike, for retirees, no number is more important than that Social Security cost of living adjustment. What are we seeing in terms of the bump up in Social Security payments next year?
Yeah, well, fortunately, most individuals will be receiving an increased payment on Social Security. Unfortunately, it's not going to really come close to what they saw in 2023. So in 2023, Social Security recipients saw a nice bump up of over 8.5%. Coming next year, you'll see a much more modest increase in the 3.2% range on those Social Security benefits.
Now, the other piece here is that most people collecting Social Security also have their Medicare Part B premiums taken out of those payments each month. What's happening on that front?
Yeah, that's correct. And, that was one of the real kind of strange things about 2023 is not only did we see very big cost of living adjustments, but Medicare premiums actually came down. Next year, we're reversing that trend. We're seeing Medicare premiums go from about $165 a month up to $175. And so that's going to be a further drag on those Social Security checks. The Medicare Part B one is a bit of a tricky subject, too, because those are income-based. If you're not familiar with IRMA, a good thing to familiarize yourself with, especially if you're selling a home or investment portfolio.
Our guide this month is titled The Key Numbers to Know for 2024. And it includes a discussion of these topics and more. There are two ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. It's Mike Armstrong and Paul Lane here on an Inflation Tuesday ahead of a Federal Reserve Wednesday. And markets are open and basically flat for the day after yesterday. They were relatively muted, and all the headlines that I saw yesterday were markets muted ahead of all-important inflation report. Well, we got the inflation report. Markets aren't moving on it, and let's jump right in without further ado, Paul. So as I mentioned, 8:30 this morning, inflation report came in. This is the first report that we get every month. Might not be the Fed's preferred, but it basically informs you as to what's going on with prices. As a reminder, this report showed a peak of nearly 9% inflation back in the summer of last year. We have now calmed down considerably to the point where year-over-year price increases as of the November report came in at 3.1%, and month-over-month, a very muted 0.1%. So with that in mind, Paul, what takeaways did you have on this CPI report and where it lands in terms of importance for the Federal Reserve?
To me, the month-over-month number, Mike, was a little bit higher than you would have expected. Granted, I know it was only a 0.1% increase month-over-month, but there was some expectations out there that perhaps shelter would have been more of a contributing factor to seeing perhaps a bit of a month-over-month decline, but there still could be a bit of a lag there. Just to touch upon the shelter prices, which make up a third of CPI. Basically what they do here is look at owner equivalent rent to get a gauge for what the housing prices look at a particular time. It was a 0.4% month over month increase, going at about 6.5% over on a year-over-year basis. Many indications out there from Zillow and other databases have inferred that there's a significant lag on that data, and what should occur is that rental prices have moderated quite a bit, so that should be a tailwind that does propel inflation down lower. We didn't really see that in this report. It could take a little bit longer. We may see it in the first quarter of next year to make it intact. So for me, shelter was one thing I was monitoring. The other piece here that has led to it being a stronger report, all of us are aware of this at this point, is energy. Energy's impact on this month's report really helped keep inflation rather muted. We have gas prices down nationally at about $3.14 a gallon. And from a CPI perspective, we saw a 2.3% decrease month over month on energy prices, a decrease of about 5% or almost 5.5% year over year. Those were the things to me, Mike, that stood out the most. The impact of the energy price decrease really furthering this muted inflation reports that we continue to see, as well as shelter, to me, a little bit higher than I personally anticipated, but something that could perhaps be a additive component as we look forward to future reports.
Yeah, and I think that shelter piece is, as Paul mentioned, pretty important. Not as volatile as energy prices, right? I mean, we need to all acknowledge that, yeah, we're being dramatically helped out in this report by the fact that overall energy prices on a year-over-year basis, in the way that the Federal Reserve or the Bureau of Labor Statistics actually measures this stuff, it's a drag on inflation. It's down 5.4% year-over-year, down another 3.6% just this month. And in particular, like fuel oil prices heading into the winter season are nearly down a quarter from where they were last year. Gasoline, we all know that's a lot cheaper too. But I think we have to acknowledge that there's war in the Middle East that could flip in the other direction rather rapidly. And you can't really rely on that for dragging things down. But what I like to look at are the trends. And so I'll start with a couple trends. One, if we start with just where are prices right now compared to last year. As I mentioned, all prices up 3.1% on a year-over-year basis. So November to November, 3.1% increase. That's on top of prices that were already quite high. And the Fed has acknowledged that they are shooting for 2% inflation. They're not there yet. If we strip out the food and energy prices, which I know not relevant, right? You can't just strip out food and energy. Those are the two things that we spend a big chunk of our budgets on. But if you do, because they are generally considered to be more volatile and outside the Federal Reserve's control, year-over-year price increases are actually at 4%. So worse than where things are with all prices because of that oil price drag. However, if we start honing in on what have you done for me lately? So if you take a look at 6-month price moves, so just annualize the last 6 months of price moves, we're now coming in at 3% year over year on total prices compared to 3.1 and 3.2% on core versus 4. If I again shorten that and just look at the 3-month average, we've actually gotten to 2.0% average price increases over the last 3 months, again, dramatically helped by energy, and 3.2% on the core prices. So we are, again, approaching, if the trends continue, a level of inflation that the Fed at least would deem acceptable. Now, I'm spouting all this off and people are probably scratching their heads wondering, yeah, sure doesn't feel like it to me. And the reason that that's the case is because the total price level in November of 2023 compared to November of 2019 is 19.4% higher. So I'll acknowledge that first and foremost, which is, I can talk about what the Federal Reserve is looking for, what economists are looking for, and what market participants are looking for, which is inflation to consistently print a number with a 2 in front of it. And that would be, I think generally considered a success for the Fed. For all the rest of us out there, the feeling of prices still being up 19.4% on a, what's that, a 4-year basis now?
Right.
Over 4 years. Well, that's compressing the amount of inflation we saw for the entire 2010 decade into a 4-year time period, and is probably a big reason why people keep responding to polls saying this economy is terrible, the outlook is bad, and it feels as though my dollar doesn't go as far as it used to.
No question. That has been a sort of recurring theme here. But at some point, from an economic standpoint, we have to put that in the rearview mirror. We have to acknowledge it, that from a consumer sentiment basis, that is something that comes up often when you talk with people. But looking at this particular report, still, I think, encouraging data. To me, there was nothing here, Mike, that really stood out that points to any areas of concern, but at the same point in time, it still takes us back to that sort of overall wait and see. I do agree with you, though, that 6-month trend number that you're seeing there, getting in and around 3% from a core perspective, that was encouraging to see that continue to be the case. And heading into the Fed meeting tomorrow, obviously we anticipate no action here for a rate decrease or increase, but it certainly will have us speculating as to what the Fed will be looking to comment on for future rate cuts potentially in 2024 here.
Well, let's start there,
Yep.
which is in the last Federal Reserve meeting, they got a pretty specific question, which was, how concerned are you today about the impact of rates going higher on the economy versus moving them lower and impacting inflation peaking again? And the answer was that they're pretty equally concerned about those things. And so if you're trying to read into, okay, what does this report do? And granted, the Fed, they're in their meeting right now. They're in their closed door meeting. They're probably not considering this or giving this much weight. But if they were, I don't think this changes that opinion. So let's take a quick break. When we come back, I want to dive a little bit more into what this might mean for, inflation for 2024, what the Fed's going to do, what it means for interest rates, for trying to buy a home, your mortgage, things along those lines. Quick break. We'll be right back with that next on the Financial Exchange.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zada from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Welcome back to the Financial Exchange. Again, if you're just joining us, we received the CPI report this morning at 8:30 showing that year-over-year prices are up another 3.1%, and month-over-month only an increase of 0.1% being helped by energy prices. But, Paul, there's a couple areas of this report that, again, you pointed out one of them, but I find a little bit, I guess, confusing and concerning. The shelter one is one of them. We again saw shelter prices up another 0.6% month over month, and that brings us to 6.5% higher year over year. That's in spite of the fact that every story I read seems to be about how landlords are cutting prices and offering all sorts of concessions to tenants to get them in the door. So I find that one interesting, but we've seen that story before where it's a real lag in terms of how long this takes to flow in. Probably benefited inflation in 2022 and is now hurting the numbers coming down in 2023 compared to what people are really facing for new apartments out there. The other one that just caught my eye and we've talked about a lot, did you see that used cars and trucks spiked again in the month of excuse me. So actually did not spike in the month of May, but used cars and trucks bumped up again to a 1.6% month over month number here. And I'm kind of just scratching my head wondering what's going on in the vehicle market. Did we finally work through the inventory that they are now bumping prices up again? I'm just unclear as to what's causing things to go up there again.
That's surprising because really what you had heard is durable goods cost, the pressures had been coming to a head where there wasn't as much demand for those, whether it be electronics, used car prices. And so that is kind of puzzling to see that type of increase in place. I don't know if it's the seasonality of holidays that more vehicles are being picked up, but to me, the supply chain issues, most of those have been ironed out. So I'm unsure as to why we would have seen an uptick there rather than maybe they're just continuing to hold limited inventory and trying to ride the demand wave as long as they can from a car perspective. Even with interest rates at higher levels too, you're just surprised to see that triggering higher prices.
So if you want to take the positive outlook here, I think from any perspective, inflation has come back down to, while still a heightened level, a bit more of a normal level. And if you get some help from things like shelter, it could come down further from here. And admittedly, I think I have a tough time seeing the scenario outside of an oil price spike where prices go a lot higher. The negative outlook from my perspective is, well, yeah, I mean, a lot of the help you've gotten over the last 12 months has been from energy prices moving lower. And that is completely out of the Federal Reserve's control and to some extent out of the United States' control as well. I know there's things they can do around the edges, like emptying out the Strategic Petroleum Reserve, but by and large, energy prices are outside of the control. And presumably at some point, these economies outside the United States, like China, that have just been, quite honestly, in the toilet for the last 18 months, start to bottom out and see demand bottoming for energy prices and move back up. But when that happens and how that occurs will be anybody's guess at this stage. If I'm to give this report a grade, I mean, this looks like a B plus A minus to me. I don't know where you come in on that, Paul, but this is a pretty solid report for the Federal Reserve in terms of what they need to do next.
I would say B to B minus. We're still really heavily benefiting from energy. You mentioned how fickle that can be. So overall, the B for me, and also the fact that I didn't see a little bit more cooling on the shelter. And again, that could just be due to the lag in data, but that would be the reason that I would assign it that grade. What I did find interesting, Mike, here to pivot gears just a little bit here is a piece that was laid out in the Wall Street Journal, which is what does this mean for the Federal Reserve meeting tomorrow and what we are looking at heading into 2024. And I thought this piece did a good job of sort of breaking out three different scenarios that we could find ourselves in heading into 2024. One of them being that the economy cools sharply and that we see a significant drop in economic activity, meaning that the Fed would likely have to make a move to cut rates sooner than anticipated. To me, if I were to assign a probability to that, given that we're almost halfway through the month of December, I don't really see the slowing occurring that dramatically over the first couple months of next year. It still seems like there'll be momentum. Granted, we won't likely match the third quarter economic growth, but we'll still kind of continue going there. The second one here is this idea that inflation would continue cooling, but economic momentum would continue. So we continue to see some very sort of muted inflationary reports over the next couple months, but we would still see the economic growth kind of kicking in at perhaps not a 5% growth pace, but maybe in around that 2 or 3%. And then that would be a really difficult scenario for the Fed to decide what is the appropriate approach to take there. Do you keep rates higher for longer, or do you find some way to perhaps fine tune and make a cut here or there? And then the third scenario, lastly, here would be that we don't have any progress in inflation, the economy heats back up, or we see an issue in the Middle East and energy prices spike, and then you have inflation rearing its head again. Does the Fed hike or have to stay at these higher rates for longer? Interested to hear your thoughts sort of on those three scenarios. Does that cover sort of all the possibilities that we're looking at heading into 24 here?
Yeah, I mean, I think that gets at the three most likely
Right.
ones. And to describe those, that gives you hard landing is scenario one, where the economy cools sharply. Again, if you were going to be seeing that, I think you'd know pretty soon, because we just got another jobs report on Friday. That seemed to indicate that unemployment was going down. We get these weekly jobless claims. So I think we'll know pretty soon if we're heading for that scenario one, which I would consider the hard landing. And in that case, it's pretty clear what the Fed does. They cut interest rates because unemployment is higher, GDP is negative, and we're probably in a recession in that scenario. Scenario three, this is one that we've talked about, which is, the no landing, effectively that, hey, economic activity, while it did slow a little bit, is still too high in 2024. Inflation, maybe it stays at above 3%. Maybe it even accelerates from here. And, what could cause that? You could see, the impact of all the stimulus and all of the, Inflation Reduction Act and CHIPS Act finally start to have an impact in 2024 and drive prices higher, labor costs go up, economic activity overseas could pick up, and all of those things could drive prices higher and drive activity higher, in which case that's a pretty tough one for the Fed. It probably means that rates stay where they are or go higher even. The scenario two is the tricky one. So scenario two is the, perhaps the soft landing. And what does the Fed do in that case, right? Let's just play that out. So, we talked about the 3 and 6 month trends in inflation. If you get to midway through next year, you're still sitting at sub 4% unemployment, and you've got inflation with a 2 in front of it.
Right.
I don't know what the Fed does. I don't think they should do anything. I think they should keep rates right where they are. Mortgage rates stay at 7% and they don't move. But there are some on the Federal Reserve who have called for rate cuts in that scenario. And that would certainly benefit markets, but could, just lead to a repeat of the 1970s where, you cut rates, activity picks up, stock prices get inflated, inflation ticks up again, and then you're right back where you were and have to raise them again. So scenario one, you get the hard landing, you get higher unemployment. Pretty clear what you do. You cut rates, and you put into action the recession plan.
Right.
Scenario three, you probably keep rates where they are, and if inflation gets bad enough, they go higher, and you're dealing with 8 or 9%, mortgage rates. And in that case, you might be kicking the recession out a couple of years, but you're still probably getting it because the rates are even higher. Scenario two is honestly a tricky one for the Fed. And it's going to be very difficult to navigate because scenario two is kind of similar to what the Fed found themselves, the position the Fed found themselves back in the 1970s, led them to a very volatile rate setting policy. They don't want to repeat that. But if you've got inflation with a 2 in front of it, you also don't want to be stifling economic activity by keeping mortgage rates at 7% and keeping the housing market stagnant and not allowing people to, buy their first home and things along those lines.
My prediction just quickly on that, Mike, is just reading the tea leaves on Chairman Jerome Powell, some of his press commentary that we've covered over the last 18 months or so, that he is very averse to repeating the 1970s. He brings up that historical example often. So I do feel like he would be very hesitant to make rate cuts in that second scenario. But again, that's just a projection based on what I've seen him say over the last year and a half or so. He doesn't want to be that chair president that declares victory too soon on inflation here.
I would think not. But nonetheless, you've got the predictors out there, the respondents to CNBC polls, and the people betting up on rate cuts for next year. By May of next year, most likely outcome is that rates are lower than where they are right now. So time will tell. We're going to take a quick break here, but Wall Street Watch is next. We'll be right back with that here on the Financial Exchange.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts this year. What is the new exemption for Massachusetts? And does that mean that a married couple living in Mass with $4 million in assets could eliminate their estate taxes?
Well, that is true. But let me expand on it a little bit. There is good news. Massachusetts' estate tax exemption has been increased from $1 million per person to $2 million per person, which in essence is great news because now with planning, and remember folks, with planning, a married couple can effectively shelter $4 million from estate taxes, whereas before, with planning, you could only shelter $2 million from estate taxes. But remember, if you don't do your planning and you don't have a trust in place, you will end up wasting one of those exemptions. And so by not planning now, although the exemption went up, which is good news, by not planning, it's twice as costly for people if they don't get their trust done and their planning done. You're just making a much bigger gift to the state of Massachusetts by not doing your planning.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection, right now by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are edging higher, but relatively quiet as Wall Street reacts to the Consumer Price Index released this morning, which showed consumer prices edge 0.1% higher in November, while on an annual basis, prices increased 3.1% in line with expectations. At the moment, the Dow is up by 75 points, just under 0.25%. S&P 500 is really flat, 0. And the NASDAQ also now 0. So very flat day so far here on Wall Street. Russell 2000 is off by 0.33%. 10-year Treasury yield, that is down by 1 basis point, now at 4.22%. And crude oil down just over 2.5% today, below $70 a barrel. now at $69.52 a barrel. Shares in Google's Alphabet are down by about 1% after the tech giant lost an antitrust case versus Fortnite creator Epic Games over the market power of its App Store. Mike and Paul will have more on the results and the implications of this ruling next hour. Meanwhile, Oracle missed street revenue expectations for its latest quarter, where sales grew 5%, generating $12.94 billion, below estimates of $13.05 billion. The company saw its bottom line grow as demand increased for its cloud infrastructure and generative AI services. However, the software company provided lower than expected revenue guidance for its fiscal third quarter. Oracle shares currently down by about 10%. Elsewhere, Ford shares up by 1% after the automaker announced it will slash planned production of its all-electric F-150 Lightning pickup truck by about half next year, as EV demand has been slower than expected. Zillow shares up by about 3% after the real estate tech platform was upgraded to market perform by JMP, where the analysts saw a 37% upside due to an increase in real estate demand and volume. And Bank of America initiated coverage with a buy rating of Crocs, also providing a $128 price target or a 22% upside, noting the casual footwear maker's momentum with strong sales expected to continue. That stock is currently flat. I'm Tucker Sylvan. That's Wall Street Watch.
Some bad news for local New England employees. Pawtucket, Rhode Island-based Hasbro is going to be cutting 1,100 jobs, nearly 20% of its workforce, as weak sales that they've been seeing really all year here have presumably continued into the holiday shopping season. And an interesting story here that kind of ties in with the next one we're going to cover too about Ernst & Young, but we do seem to be seeing more announcements of these, granted 1,100 employees is not going to change the United States economy, but these white collar jobs kind of under pressure at this point in time. I'm interested in your take on Hasbro in particular, Paul.
Yeah, what we saw from Hasbro, as you mentioned here, the 1,100, in addition, we had seen 800 layoffs earlier this year. Really what surprised me, Mike, is just the decline in toy sales that we've seen over the course of this year. As of the month of November, sales were down 10% from a year ago to, that's just the toy industry in general. Hasbro was revising their sales numbers to indicate a 15% drop after forecasting a 3 to 5% decline previously here. Mattel has held its own with Barbie sales being tremendous in the Q3 here. And
I was going to say you had a pretty big hit there with Barbie, and Hasbro has not. I mean, Hasbro had the Transformers movies, which I know they presumably still make, but I don't think anyone's sought them out in quite some time. And Mattel getting the Barbie boost. I mentioned yesterday I was at the Mall of America out in Minnesota, and they had a full dedicated restaurant it was called the Barbie Cafe. It was like a 3-story restaurant built into the Mall of America. We unfortunately could not get reservations in time, so we weren't able to attend, but clearly they're still making some money on that movie.
Yeah, it's unbelievable, the numbers that it generated there. I believe it was $1.4 billion at the box office. What blew me away also, Mike, on the toy sales side of things is that half of their year's sales come in the weeks leading up to Christmas. I mean, it should make sense. It should be intuitive that all their sales are compressed in that holiday period, but 50% is just such a large amount of your sales to have in just a 3 or 4 week period. So it'll be interesting to see here. When we look at the job market on a broader spectrum, certainly this was an area that was weaker in terms of toy sales. Again, the other story that we have here to cover is Ernst & Young laying off some of its U.S. partners. They had previously laid off 3,000 U.S. workers earlier this year in April, but now announcing that they're going to be cutting some partners across different divisions. It's going to be about 10% of their partners in its consulting division and about 4% in strategy and transactions. And if I look at these two as a whole, Mike, it makes sense because these are not really sort of representing the whole overall job market. There are niche areas that have not done really well. Consulting is way down because you just don't see the amount of mergers and acquisitions that we've seen in years prior. IPOs are down quite a bit, and it looks like on the toy sales side of things that people just have cut back spending there as well. So I think that's really specific more to industries rather than a problem of the whole job market in general.
On the toy piece specifically, I don't want to read too much into this because my guess is that it's just what you described, which is people have been spending like crazy for the last 3 years. They're finally pulling that back a little bit. But I wonder about the long-term trend there, because I don't know how many of my loved ones I've had to say, please stop it with the toys for every celebration that we have, because my house is literally busting at the seams with my 3 kids and the number of toys that they haven't played with in 2 years. And I feel like that's, heartbreaking to hear for some people, but like the number of toys that we have received over the past and are just sitting piled up in our basement, those conversations are something that I have pretty frequently, and every other parent I talk to is in the same boat, and I wonder if there is something more cyclical going on.
We have to give a very, very strict list to our family members looking to get gifts for our 2 sons, because it's out of control how many toys there are. It's insane.
I'll jump on.
My kid was playing with a Poland Springs bottle the other day. I'm not kidding. Half an hour he was playing with it.
I'm right with you guys. And sometimes I thought, geez, I'm making too big a deal of this. I'm extrapolating out to everyone. But it's interesting to hear 3 of us kind of in that age range saying that when we tell our brothers and sister-in-laws no gifts for the kids, and they say the same thing, vice versa. It's, hey, you guys don't need to give our kids gifts, and we're not going to give them to you. We have enough stuff and clutter around the house as it is. I had a conversation with a client yesterday who was talking about more focus on experiences for the kids and less on, getting them certain items. Maybe that's just across the whole country. There is just less focus on getting those physical toy items.
In their defense, though, what better feeling is there? What better feeling is there than seeing a kid super excited about a toy you gave?
I'm excited.
Yeah, I mean, that part hasn't changed.
Right.
It doesn't matter. I could wrap up, like you said, an empty Poland Springs bottle, and you can still get it. The kid still gets excited about unwrapping the thing. And yeah, the shinier and more noise the thing makes, you're right, the bigger the reaction. So I do understand it, but literally, like, those are the conversations I'm having with my wife is, okay, we got this thing last Christmas, how long do we have to wait before we go donate it to Savers or some other organization that's going to re-gift this thing, because they haven't touched it in 9 months.
Right.
Yeah,
that's coming
it's
for
interesting
us.
to see. And if you're Hasbro or Mattel, you need to structure yourself around that and start thinking of, okay, how can we find the right talent to focus on movies, for example, since the sales might not be coming in the way that they were in years previous. But again, I say all this, and then I still, in the back of my mind, wonder, like, is that real, or am I just speaking from my experience?
Me
because
too. Yeah.
The counterpoint to that is my house is full of Hasbro and Mattel toys, even if I tell people to stop buying them.
Right. They need a big brand to get behind, like a Barbie. That movie launch was a real strategic coup for them. And so I think you need to see the same thing for Hasbro here, to have developed brands. And I wonder if the market just gets so fragmented, because now our kids can digest all sorts of different content out there. It's not like when we were growing up where it was just Power Rangers and Ninja Turtles that were the go-to products. There's so many different things that they can consume out there. Maybe that plays in too.
The other takeaway that I'll just have, and this tied in kind of to a story that we covered last week, where the unemployment rate in New Jersey is rising faster than any other state in the country, and seems to have to do with the fact that a lot of New York-based jobs, white-collar type jobs, are disappearing, while they still have a shortage of nurses and teachers. And we're seeing that in the employment report too, where, if you take a look at the report that we got last Friday, for example, the biggest gains that you saw were in healthcare, where you saw 77,000 jobs added, government, nearly 50,000 jobs, leisure and hospitality, 40,000 jobs. Whereas, take a look at retail trade, went down 38,000. Information jobs, little changed, and transportation and warehousing. And so, when I take a look at where nationwide this labor market is growing, it doesn't seem to be in those white collar jobs. And so, I do wonder what the status is of job cuts from the likes of big financial firms here in the Northeast. And, do you have enough of the demand from healthcare and government and other types of jobs to make up for the potential losses you'll see going forward? Let's take a quick break here. When we come back, A national survey on small business confidence seems to be continuing to recede, like many other confidence surveys that we've seen. What does it mean for this market and the state of the labor market? We'll cover that next on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zada from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The cold weather is here, and if you haven't done it yet, now's the time to start planning your winter getaway to the U.S. Virgin Islands. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange, so go to visitusvi.com and book your trip today. That's visitusvi.com.
All no surprise here, but the national survey of small businesses that is done on looks like a monthly basis here. We got the reading for October coming in lower than it was in April of 2020. Came in at a reading of 90.7, showing pessimism about the state of small business. That is slightly better than it was back in April of this year when it read at 89. But this is just another one of these surveys that I look at that I scratch my head to say, wow, that's incredible. You've got small businesses right now saying they feel worse about the state of the economy than they did in April of 2020 when the U.S. government said to a large portion of them, hey, you don't have a business anymore.
I cannot believe that it could be lower than that point. I mean, so many had to close their doors entirely, and there was really no anticipated time frame on when they'd be able to open them again. If I'm remembering the time frame correctly, I think at least it was pretty heavy lockdown for the first 2 months there. But regardless, it is incredible how negative sentiment is continuing to be. We did see the Michigan report come in more positive on the consumer sentiment side of things, but these reports have been tracking quite negatively over a significant period of time, Mike. And the only thing that I can think of that would lead it to be so pessimistic is really the borrowing cost side of things. That's something that has changed dramatically since March or April of 2020. Small businesses differ from some of the larger behemoths out there that we talk about, Amazon, Microsoft, Apple, etc., that sit on a ton of cash, that they are much more dependent on financing capital for their business operations. And if you're running a business, a small business, and you need to access capital for short-term needs, it's at a lot higher interest rate than it was several years ago, and that could be leading to these business owners feeling quite tight in the pocket and also thinking or reconsidering expansion or just really cutting expenses across the board to make sure that the interest payments that they're subject to don't pull down their overall business.
Yeah, I mean, I think what I continue to go back to is that based on these survey results, it's pretty clear to me that individuals, small business owners, generally everyone feels worse about inflation than they do about most other financial conditions, right? If it's high unemployment versus inflation, they'll take the higher unemployment. Yep. They'll take the economic slowdown. They'll take the recession. All of that over, the impact of inflation on households seems to be the reading that I have here. Because again, you mentioned University of Michigan sentiment survey. It has improved from the lows that we saw in the peak inflation time of June 2022. Right. But we are still at this point getting results that are nearly as bad as they were back in the depths of the financial crisis of 2008. We're getting numbers that are way below where they were in June of 2020. And so, I mean, that's the read. The problem is, what do you do about that? Because, these in the past, have taken together and, put together with a number of other things, used to be pretty reliable recession indicators. And so far, at least over the last few years, they haven't been. They've been pretty miserable indicators of what's going to happen next with this economy. And so trying to figure out what that means for me if I'm approaching retirement or my investment portfolio or, running my small business and trying to figure out how to finance things from here. Do I buy a home? Am I locking myself into a high price with a high mortgage rate? Should I just wait on all of that? It's tough because a lot of the assumptions that we've built about how the economy works have been formulated over the last 40 years when there's been little to no inflation, right? The last time we had significant inflation, you have to go back all the way to the 70s and I suppose early 80s. And we just don't have a lot of great reliable context for that. And so navigating these types of things, I do recognize can be quite challenging and quite concerning, honestly. I've seen all sorts of mistakes made by individuals saying, hey, things just look bad or I feel bad about them, whether it's the political situation or the economic situation. And so I'm going to make vast changes to my investment portfolio. And in some cases, that can be the right thing to do. In others, it can be quite the wrong thing to do. And if you have questions like that, or if you're struggling with these types of decisions as, hey, what do I do next as we're heading into what could be a very volatile 2024. What do I do? Give us a call at the Armstrong Advisory Group. Phone number is 800-393-4001. We provide free consultations for folks to sit down and talk to us about what's next for them and how to plan out their retirement strategy. Again, that number is 800-393-4001, or you can take a look at our website and schedule an appointment online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The average size of stores in the United States is the smallest it's been in at least 17 years. Retailers signed leases averaging 3,200 square feet during the first 3 quarters of 2023. That's the smallest size since the data began getting tracked in 2006. What's the impact here, Paul? I'm not sure that I really read anything into this, because overall, in terms of, shopping centers per capita, we're still well beyond any other developed country, or really any country at all that I'm aware of. But does this tell us anything about the preferences of the American shopper?
To me, what it looks like is that if you're going to be doing a retail storefront, there's more of a focus on experience rather than just putting together a huge amount of square feet and putting a bunch of products out there. Now, with the emergence of e-commerce, people have a better understanding of what they want to buy when they're going to a specific location and what they're looking to do when they actually go out and shop versus ordering online. So it seems as if the focus is more on, if they're going to be coming to us, let's draw them in with a good restaurant or something to come in for a specific reason, rather than let's just throw a bunch of stuff out there so shoppers can come in and sort of peruse and grab everything that they need. It seems like e-commerce has kind of filled that void, so it's now more about making a better experience when you get there in person.
Yeah, the Sears of the world and the Bed Bath & Beyonds are no longer with us, and that certainly cuts down the average store size, and the IKEAs are few and far between. That's all the time we have for this hour of the Financial Exchange, but a lot more to come in the second hour. We'll recap on inflation and give you a full market update. Stay tuned here on the Financial Exchange Radio Network.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled The Key Numbers to Know for 2024. Mike, when it comes to how much someone can contribute to a 401k plan or 403b plan next year, what do those contribution limits look like?
Yeah, so you're getting a slight uptick from 2023, where it was sitting at $22,500. You're now going to be up to $23,000 for those 401k contributions. And in addition, if you're over the age of 50, you're going to get an extra $7,500 that you can potentially put in there. All of that is before any sort of employer contribution or match. So you're now getting up to $30,500 in total if you're over the age of 50.
Mike, what about for folks who don't have access to an employer-based plan but instead need to contribute to an IRA or traditional IRA?
Yeah, so that's where those limits are much, much lower. So this coming year in 2024, you're looking at a $7,000 contribution limit for traditional and Roth IRAs. There are all sorts of rules around this in terms of income phase-outs, who can contribute, if you're employer-sponsored or not, if your spouse is employer-sponsored or not. So there are some tricky pieces here. There is also a completely different set of rules and limits when it comes to self-employed individuals. So definitely other things to know if you maybe own your own business and have a SEP IRA.
Our guide this month is titled The Key Numbers to Know for 2024, and it talks about some of the many changes happening when it comes to contribution limits, cost of living adjustments, and other numbers. 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting armstrongadvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Early estate planning is crucial if you want to avoid massive tax consequences and protect your assets. Cushing & Dolan are experts in estate planning and taxation, and their new free guide can help you do just that. It's called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. You've worked hard to provide for your family, so if you haven't done your planning yet, call Cushing & Dolan today at 866-848-5699 and get this free guide called The Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. Mike Armstrong, Paul Lane, and Tucker Silva with you on an Inflation Tuesday where we've got markets slightly turning positive here. The Dow is leading the way up 102 points, almost 1/3%. The S&P up 6 points, about 1/10%, and the NASDAQ up 36 points, about 1/4%. Yield on the 10-year Treasury this morning coming down slightly to just over 4.2%. And now we all await the commentary and Q&A from Jerome Powell. That conference will kick off tomorrow at 2:30. Wide anticipation that they won't actually change the benchmark Fed funds rate, and that would be quite surprising if they did. But, the Q&A after the last Fed meeting revealed some interesting things about how the Fed is thinking about inflation and recession and where rates need to go from here. And I think everybody will be tuning in to see if that has changed at all with data over the last few months. We, as I mentioned, received an inflation report this morning on CPI, and I think ties in pretty well to an email we got from a listener. We received this morning from a listener. I listen daily, and for the love of me, I can't figure out why you keep saying inflation is under control. Everything is rising for consumers on a daily basis. My animal care center just put out a memo they need to charge more. And hey, as somebody on a fixed income, this is just not sustainable. It might not make a big deal from somebody making $300,000 a year, but for all the rest of us, it is really tough. And I think it's important to acknowledge that. When we talk about inflation under control, I do try and acknowledge the fact that, yeah, it might be declining, but the total price level is incredibly uncomfortable. And it doesn't mean that prices are coming down either. Other than a few key areas like cell phones and TVs, prices are still increasing, in some cases uncomfortably. And for a large portion of the country, especially those on a fixed income or in the bottom half of the income bracket, it's not terribly sustainable either. And so when we look at these polls about how Americans feel about the economy and what they think is going to happen next, I think this has everything to do with it. My mere point with inflation is that if you ignore the fact that progress is being made on inflation, and by progress, I merely mean that the pace at which prices are going up has improved compared to this time last year. then you run the risk of misunderstanding what markets are going to care about and what corporations are going to do next. I think that's my main takeaway. It doesn't make life any easier for any of us. Prices are still up nearly 20% on a 4-year basis, which is basically the total level of inflation you saw for the entire 2010s decade. But if you ignore the progress that's being made, then you run the danger of missing out on big stock market rallies, because that seems to be what the Fed cares about and what market participants care about.
I agree with you. There's sort of two different ways to look at inflationary data. Typically, the way we cover it on the show is from an economic market perspective. What do the markets want to see in terms of inflationary progress, as well as what is the Fed anticipating? What do we anticipate they may do? Sort of that type of conjecture is what we'll talk about on a daily basis. But it is important to acknowledge that there is, taking away the economic lens, there's the consumer impact side of things, which I would absolutely agree with this emailer. We have had, as Mike just mentioned, inflation compressed in a 3 or 4 year period that would typically take a decade plus or more to have that same type of increase on many prices for different goods and services across the board. If you are someone who's living on Social Security or a pension, typically the pension or Social Security is not doing enough to cover those increases. I'm right with you. Hopefully, from a portfolio perspective, last year was a very difficult year, so that doesn't make things any easier either. But you have that exposure to equities, which we like to focus on the show, and the bond market too, that have appreciated and have provided some of that inflationary head. But again, that's easier said than done. It's really difficult to see the portfolios last year. There has been some relief this year on the impact that it's had on a consumer out there. We're always focused on looking at that 12-month trailing, but there's no question things have gotten way more expensive than where they were years prior. And unfortunately, I just don't really have a good solution, or there's really no sort of silver lining that you can offer this person here, because we're not going to go into a deflationary environment. The hope is just that what we're mentioning is that the price increases are slowing, and that's what we need, is to get back to the levels we were in, the 2010s decade, where inflation was much more modest. That will allow for everything to catch up on the pricing side of things.
But yeah, I mean, look, if you're living in the Northeast, where you might use, heating oil to heat your home, if you rent instead of own, and or maybe you're trying to buy a home with a higher mortgage rate now, your personal inflation might be well above 19.4%, right? If you consume more services than you do goods, right? If a lot of your spending typically goes to animal care and welfare there, rather than buying toys and TVs, then your inflation is going to be more exacerbated than what we're dealing with on the national level and how they weight inflation. And so that's the trouble with any of these statistics, is they are just that. They're averages. It's an average of how the average American deals with inflation. And, in different parts of the country, that can mean vastly different things.
Yeah,
vastly, right? The economy in Massachusetts has little to nothing to do with the economy in Indiana. And you have to kind of acknowledge that when you're dealing with all these statistics and these numbers here. Moving on from inflation, a bit of a shock in the antitrust space overnight, where Google lost in a case brought by Epic Games. If this sounds familiar, it's because Epic Games brought almost the exact same case against Apple, and Epic, by and large, lost that case. They brought the same case against Google and seem to have won this case. It seems to me that both of these cases, the findings from the two cases can't both be correct, because it's pretty much the exact same case. And so the question to me is, how far up does this get appealed, and what is probably the U.S. Supreme Court going to decide about it?
Really interesting, Mike. This is something that I almost forgot about, because we covered it on the show when the issue emerged, but to see this decision rewarded in Epic's favor was quite a surprise to me. This is specific to Google's Play Store, and it's similar to Apple's App Store, which basically they make this platform for people like Epic Games who have the game Fortnite to post their games, but they take a significant cut of every single app item that is purchased in the program. I believe Apple's is in around 25%, and the indication here was that they were using these two exchanges, both Play Store and the App Store, as a monopoly and boxing out competition. Epic didn't even want monetary damages. They just wanted things to be more competitive and fair. I'm curious as to why Apple was able to dodge this lawsuit while Google here was not as fortunate from their standpoint. It seems as if they had perhaps deleted some employee chats that may have included some relevant information in the case, but jurors were able to make this decision, Mike, within a matter of 3 or 4 hours. So it was a pretty resounding decision that was made here.
And arguably, Apple is more restrictive on this front than
Yes.
Google is. Like, Google has the Play Store, but I can go, for instance, on my Google device, I can download the Amazon App Store and download apps from Amazon to use on my Google device. I cannot do the same thing in the Apple universe, right? I cannot go to the Amazon App Store and download an Amazon designed app on my iPhone. To me, in the reading that I've done, the only difference between these two is that the Google trial was decided by a jury and the Apple trial was decided by a judge.
Right.
And so where this lands on appeal is going to be interesting and economically significant. The estimated spending on application in-app purchases for the next few years is around $200 billion. So if you have these companies, granted, the standard cut is 30% of that spending, maybe it's negotiated down in some big cases. Some big clients like Spotify have, lower deals, but this is a very economically significant case. And quite honestly, I'm not sure that I agree that Epic has much of a case here. I'm not sure that I agree with the jury. The markup here that they're talking about, a 30% markup, is pretty similar to what you see in other industries. It's the restrictiveness of it that they seem to be calling out here. And I'm not convinced that this will be the final ruling. And especially in light of the Apple ruling, it seems that they are two complete opposite rulings on very similar issues.
We know Google's got the lawyers to fight it. That's for sure.
They will certainly
for decades.
They will certainly be doing so. No doubt about it. I wonder what Google stock is doing this morning in react. Yeah, barely moving in reaction, off a little bit less than 1% in early trading here for Google shares. Let's take a quick break. When we come back, we're going to have trivia for you on the Financial Exchange. We'll be back with that next.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
With this year quickly coming to a close, now is the perfect time to review your financial situation. Planning for later life is a year-round effort, and with the calendar about to change, there are several important numbers to be familiar with as we turn to the new year. Hi, this is Mike Armstrong from the Armstrong Advisory Group. In our new guide called Key Numbers to Know for 2024, we'll discuss a variety of numbers related to retirement account income and gifting limits, Medicare Part B premiums, and marginal tax brackets. Learn about how these numbers may help you with your planning for the upcoming year by calling our office today at 800-393-4001. Ask for your copy of the free guide called Key Numbers to Know for 2024. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. Well, on this date in 1997, the Boston Red Sox signed their newly traded for star pitcher Pedro Martinez to a 6-year, $75 million contract with a 7th-year option. Pedro pitched magnificently during his tenure in Boston and concluded his time in Boston with a World Series title in 2004. Trivia question today: how many Cy Young Awards did Pedro win while as a member of the Red Sox? Once again, how many Cy Young Awards did Pedro Martinez win while a member of the Boston Red Sox? Be the 9th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 9th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
In spite of the headlines that we have, gotten comfortable with, Tesla opening manufacturing facilities in Mexico, Apple trying to invest heavily in manufacturing in India, the fact remains that companies are still very intertwined with China here in the United States. And that's the piece from the Wall Street Journal today. U.S. companies finding it hard to avoid China. Data showed that the two countries remain intertwined despite American efforts to diversify supply chains. And I'm interested in your take, Paul, because part of my take here seems to be that in spite of all of the tariffs, in spite of all the new sentiment away from China, we still seem very interconnected. And perhaps what you've really built here is a new system of China shipping goods to other countries to merely avoid tariffs and adding on cost to American consumers rather than actually doing anything to dramatically diversify supply chains, so far at least.
That's what it seems like. You're sort of seeing two different pictures being painted here. One is this idea that we are getting less from China because according to the U.S. trade data, China just accounted for 13.3% of U.S. good imports during the first 6 months of this year. That's the lowest level since 2003. However, if you're to step back further and take a look at the actual data and go sort of broader, it seems as if that China, to your point, Mike, is just using some other countries as middlemen of sorts where they're getting the products to a Mexico or to a Thailand and then eventually they are shipping them to the United States. So to your point, you're just creating another link in the chain. That is the tricky thing with tariffs and things of this nature, that oftentimes it seems as if it just creates a workaround for China, that they just have to sort of circumvent the tariffs. And I do think that in actuality there has been some positive impacts from this. It's brought a little bit more focus on companies saying perhaps we'll bring manufacturing to the U.S., add some jobs there. But it still seems as if that China remains dominant in terms of current manufacturing today. I will say we certainly have seen a lot less foreign investment into China from the U.S. as well as many other countries out there. So that part has been impactful, but it seems like the existing manufacturing still leaning on China quite heavily, as much as we've tried to push away from them.
Yeah, I don't mean to discount everything here, right? Like, I do think that the progress that's being made on semiconductor manufacturing and the focus that we now have on making sure that, you know, the highest technology chips don't end up in Chinese hands, I think that work's important and has been impactful. There are other areas where I think it's a struggle, right? I mean, we've talked about, I haven't actually ever bought anything from either of these companies, but Paul, Tucker, have either of you bought anything from Temu or Shen?
Never even heard of them.
You don't know what I'm talking about here?
No.
Oh, we should cover this at some point. These are Chinese-based retailers like an Amazon. Primarily, it's fashion items, so clothing items, but they have a wide variety of stuff, and it's outrageously cheap. And again, I haven't bought anything from here, but I've seen a lot of negative sentiment towards these and feedback from people saying, hey, you're buying this stuff directly from Chinese manufacturers. You're going to be putting American companies out of business. And I think that's genuinely true. But if I'm that person who emailed us, who's saying, hey, I can barely afford my pet's vet bills based on all the inflation that we have, I don't really care if it comes from China. I don't really care about the tariff war. I'm not in the labor market anymore. I'm not worried about my job disappearing over to China. I just want cheaper stuff. I have a tough time telling that person, like, no, don't go use these Chinese e-commerce sites. It's not good for American business. Well, who cares? And by the way, when I go into any American business and I want to buy a new jacket, for example, find me one that hasn't been made in China in the first place. I think that this is a really tough argument to make for certain items that, hey, American consumer, you should bear the cost of higher priced items so we're not dealing directly with China. Well, I don't know. I'm not sure I buy that argument.
It's easier said than done. It's really difficult to unwind the manufacturing prowess that China has, both its cheap labor cost and the amount of infrastructure. They just have such a head start in terms of its capabilities there, Mike, that as much as you try, it's hard to avoid them just because how low cost that they are.
Yeah, you should go. Again, I'm not encouraging you to go shop on this site because I think there are a lot of problems with buying anything directly from a Chinese e-commerce site. Like, I don't really want them to have my credit card or home address information, quite frankly. But the prices on some of these items, it seems like probably it seems to me that they are basically shipping this stuff at the price that, you would pay as a Patagonia supplier, for example, just buying stuff directly from the warehouse. And I think that companies are going to face an increasingly difficult time challenging this, aside from lobbying the U.S. to put tariffs on on these types of products. Because look, like I said before, if I go into 9 out of 10 retailers, most of the stuff that I can pick up there was made in China. So why wouldn't I buy it directly from that Chinese retailer? It's a very tough argument to make, I think.
No question. Cost rules everything. The cheaper you can get it, that's what people are going to gravitate towards.
At the end of the day, though, we will see where this develops. And, where I think the real focus has been and needs to continue to be is on the chip side of things. And I think real progress is being made there. I don't know how long you can delay China from getting access to this stuff, but clearly we have a head start, and Taiwan has a head start on that front. And being able to continue to delay China's access to those products is and continues to be and needs to be a high priority. Let's take a quick break here on the Financial Exchange, but when we come back, we'll have your trivia.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zada from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There actually is. Now, we talk about, doing estate tax planning, which I tell you should always do. So even higher net worth clients should put together their basic estate planning. I call that the foundation of their estate plan, of anyone's estate plan. And for higher net worths, we to be using, revocable trust. There may be one or there may be two, but you want to put those together first. And that helps us shelter what we can. But to leverage your estate tax exemption that is going to be going down in 2026 to about, $6.5 million indexed for inflation, how do we use it? We can gift it. And if you gift it away, think about what you want to gift, but you can put it into another trust called a gifting trust, a spousal lifetime access trust that allows the spouses each other to enjoy what's in the other one's trust, but you've effectively given away the asset. So all that you've given away plus all the growth will be estate tax free moving forward, and it can even skip a generation from there. So planning is critically important.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection right now by calling 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Trivia question today was, how many Cy Young Awards did Pedro Martinez win while a member of the Boston Red Sox? Well, that would be 2. Martinez won 2 Cy Young Awards as a member of the Red Sox in 1999 and in 2000. Pedro won his first Cy Young in 1997, the season before being traded to Boston. Winner today of the Financial Exchange Show t-shirt was Randy from Eastham, Mass. And Randy's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Well, every year Google comes out and releases their biggest search terms and just the year in Google for 2023. And according to Fortune magazine, eggs, Taylor Swift tickets, and sriracha sauce, all being extremely expensive, were towards the top of that list there. It's actually a pretty cool tool. You can go find it just by obviously Googling year in 2023 search, and you can browse by country, the whole world, depending on what you want to look at there. But it gives you some interesting things as to how people are thinking about and what people are searching for when it comes to their search trends. What did you pick up on, Paul, for the year in search for 2023?
To me, the one that stuck out that was pretty funny was the most searched word was Riz, recently named Oxford's Word of the Year, which was a frontrunner for trending slang definition inquiries. And I stumbled upon this. We were out to dinner with a couple probably 6 months back, and they have high school age students, and he mentioned that term as something that he had heard his kids say, but he asked me if I'd ever heard of it, and having younger kids, I had no clue what that meant. And so I was just like many others out there that I had to ask him to clarify what the heck that meant, and it's probably showing my age that I didn't know what it was. And for the listeners out there, it is kind of a short for charisma. It's having style or charm or attractiveness, the ability to attract a romantic partner is what the Oxford University Press has defined Riz as, which was, I guess, the word of the year for 2023.
Wonderful. I mean, this is actually pretty telling and can help you understand where trends are going if you have real-time access to this data, which I don't think you generally do. I think they only put this out once a year. But for instance, if inflation is as big a Google query for 2024 as it was in 2023, then you probably have some serious problems there. I was just taking a look at when egg prices actually peaked because I thought that was more of a 2022 story, but that was actually January of 2023 when the average price for a dozen large grade A eggs hit $4.82 according to the St. Louis Federal Reserve. So that was the peak on egg prices. They've since come back down to that $2 range, but we're literally twice as expensive. And yeah, I mean, I'm actually on this site right now, and I see almost no mention of Taylor Swift. So I'm kind of scratching my head, like, where she didn't even show up on top musicians or songs that were searched in 2023. So maybe people don't need to look it up; they just know. But musicians top 5: Jason Aldean, Ice Spice, Oliver Anthony, Peso Pluma, and Joe Jonas were the top 5. So I don't know where Google's getting all of this stuff.
Yeah.
It would seem to me that this was the year of Taylor Swift.
That doesn't make any sense to me whatsoever.
Right?
That's really shocking. Does they mentioned here that last week Wikipedia released its year-end most viewed entries, and ChatGPT led the pack. Any Google data that ties into people searching for ChatGPT or information on it? Because I think that was one of the stories that really was a prominent one for this year as well.
Yeah, again, nothing that I see here on GPT, artificial intelligence, or even AI. So,
wow.
Yeah, interesting, but I guess can't go and explain everything away, because I think, to me, if I think about the big stories, and maybe I'm just too market and economics focused, but AI certainly tops the list. ChatGPT, especially recently with the fiasco there, would be towards the top of the list of things that people were interested in 2023. So I'm surprised to not see that there.
Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing and Dolan are experts in elder law and taxation, and they have a new guide out this month called Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Well, just as I stand here trying to convince everyone that inflation seems to be improving in terms of the pace of price increases, Comcast has to come out and directly contradict what I say. The cost of watching TV for Comcast subscribers is going up, joining a lot of the streaming networks and other cable providers. But Comcast saying that the average cable and internet bills will increase by 3% starting in January, which amounts to about a $3 to $4 increase for most users. Verizon, the area's second largest provider, said it raised cable TV rates by $5 to $9 per month back in March, and then October raised its internet fees by $4 to $10 a month later in the year. Paul, how do you consume television and your internet providers? Are you an Xfinity subscriber?
I am an Xfinity subscriber, and this irritates me to no end because my bill is already $260 something a month.
Dear
I think.
Lord!
Yeah, we're higher than that.
I have
what are you doing?
Multiple boxes. That really is what jacks you up to a higher level, and that's really the main thing. I think it's $10 or $15 extra per box, Tucker.
I think it's $10 a month. Yeah,
but they're playing a dangerous game here. It's not. I'm not breaking news by saying it's a pretty saturated market and that it's a dying business. But to continue to charge your declining subscribers more money for your service, you're putting more and more pressure of a gun to our proverbial head to say, enough of this. I'm so tired of it, because ultimately the reason I subscribe to cable is the sports package is a huge part of it. And if at some point that breaks, YouTube TV is something that I've used in the past, I may just switch and pivot over. It's a crime of convenience that I continue to keep cable, but you keep seeing these price hikes, you're going to have action. And I guess they're just trying to squeeze as much juice out of us subscribers until there's a tipping point, which seems like in the next 5 years or so that would reach that.
Well, I'm not sure, but I'm actually of the opinion that this might be a well-timed increase, right? We just came off the backs of the Disney Pluses, Hulu's, HBO. I think pretty much all of these bumped up. Netflix certainly bumped up their monthly cost. Am I wrong? Did anybody not do it? I can't think of any streaming subscriber that laid off the price increases this year.
Netflix did. Yeah, I don't think they did. They keep realizing that they're not making any money, so they have to charge more.
So, and another piece to that, right? We just got off all the strikes. So all of the people that work to create all this content are going to need to be paid more after those strikes than they were prior to. And then furthermore, I'm taking a look at my own platform that I use. So I use a platform called Fubo, which I like because there's no cost for additional set-top boxes. And when I got it, it was significantly cheaper. I think I started off at $50 a month.
They always bring
channels.
you in that way. YouTube TV is the same deal.
Today, if you want the pro version of Fubo, which I don't even know if this includes Nessun, I think that it does, but this is what you're looking at. You're now up to $75 a month after the first introductory month. $75 a month for this. Now, again, there's no set-top box fee. I can watch it on my phone. I can, like I did recently, travel out to Arizona and hook it up on my cousin's TV to go watch sports there. So it's in my opinion, just a far better piece of technology than cable. But, this is just the TV. I then have to layer in my 50 some odd dollars a month for internet. And I'm now starting to get in that same territory that others are in when they're on those cable packages. Because I'm guessing, do you have like a phone system too, Paul? Do you still have a home phone?
Yes, only for the security system.
Yeah.
We don't ever answer the phone at all, or really, we have one phone hooked up only for the security system purposes.
So I don't know. It seems to me that we're going back to the bundle, and these costs. You're right. I mean, it's a big difference when you look at your what did you say? $230 a month right now. $260.
And what do you?
So
want?
yeah, I'm probably a good $100 a month cheaper than that.
Right.
So that is still a pretty significant swing.
It is, and it seems like you don't really lose out on anything if I'm interpreting that right.
TNT.
Okay.
I got no TNT.
Guy, so that
no, you can't
watch the last platform I had TNT but didn't have Nessun, and I just keep switching between all of these because they keep dropping what the Bruins play on. Last year I couldn't watch any NHL playoffs. It was infuriating, or a large portion of them anyway were appearing on TNT, and the Winter Classic was on TNT. So yeah, you do lose some things, but to me, I don't know, for $1,200 a year, I'll just go to a bar when I really need to watch a hockey game.
Must be nice.
Let's take a quick break. When we come back, going to have a little bit of stack roulette here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zada from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Warner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and we want to thank all of you who came out for this year's DAV 5K. The event was an incredible success and a terrific tribute to our great American heroes. If you weren't able to attend but would still like to make a donation, visit dav5k.boston for all the information. That's dav5k.boston. The DAV 5K Boston was presented by Veterans Development Corporation.
Well, it's time for Stack Roulette here, Paul, and we have some doozies. Why don't you kick things off? What do you want to start with on Stack Roulette?
Let's talk a little bit Netflix. Netflix is serving up live tennis featuring Rafael Nadal and Carlos Alcaraz in a streaming company event that will be debuted. Is that later this week that the match will be going on? But basically, to me, it's noteworthy because live sports has sort of been the final frontier, I think, for Netflix to add on its platform, and they've sort of dipped their toe in the water with a couple different events in the last couple months here, including they did the Netflix Cup, which was a golf tournament, and they also did some other events. They're looking at live boxing matches as well. Live sports are the reason that we just talked about in the previous segment, Mike, that you continue to have your cable subscription, or you make sure that you have a package that includes an SN for the Bruins, or in my case, to be able to watch the Celtics game is really important. And for Netflix to further lock in its subscribers, having some live sports, to me, is sort of the final push that they can make to make sure that Netflix is always part of your bundled services that are being offered out there. And it will be interesting to see as they continue to add more and more exposure in the live sports space, because they've been sort of hesitant to really jump into it.
Yeah, I do think that events like this in the streaming space make some sense, right? One-off events that a regular watcher of the sport won't necessarily be tuning in for. What bothers me about live sports on streaming, Tucker, do you remember, I don't remember which game it was, but there's a recent Bruins game.
Oh, yeah. I missed the entire first period. Missed the entire first period because it wouldn't connect to Hulu for me, or Hulu was having issues or something.
Is that what it was? It was Hulu, so you could only watch, was it the Bruins-Rangers game or something like that?
Yeah. In the entire first period, Hulu had connectivity issues, and that went viral on Twitter, actually.
So, I think you can do, and I think, it's honestly a good idea, and I'm sure that Netflix has a ton of data about their viewers of, what sort of interests they have. And so, I don't think that they just randomly selected tennis out of a hat would be my point here.
Right.
But when these streaming platforms try to, even the Amazon one, what do they do? Thursday Night Football?
Yes.
Yeah.
Even that kind of bothers me, but at least that's in almost everyone's home. But if Netflix, for instance, goes and picks up one of the Monday night games every once in a while, it's just going to be infuriating, because we're again getting away from that package of, hey, I have one platform that I can log into and watch everything, to, okay, what this week, what streaming platform do I have to watch the Bruins Devils game on? That would just be infuriating and disappointing. So I hope we don't keep going in that direction. I want to talk about a different type of athletics that, rings a little bit truer to me, because as everyone knows, on Saturday night, the World Excel Championships took place, and Andrew the Annihilator Ingai lost his title. If you have no idea what I'm talking about, that's because I didn't know what I was talking about until I read this article. But there is apparently an annual national championship for who can be best at Microsoft Excel. And I thought I was a pretty big nerd, but I didn't even know about this one here. I do think that, Tucker, we might need to do a live broadcast from the National Excel Championships. It's in Vegas, so that kind of checks the box for you.
I actually wonder if there were odds in this. I might have sprinkled something.
I mean, it's Vegas. There had to be, right?
Oh, yeah. If it's anything competitive and it's somewhat like sports or gaming related, then yeah, sure.
I just can't imagine. I mean, again, I started my career working for Fidelity Investments as like a finance analyst, and so every once in a while you would hear conversations of people bragging about the formula that they put together or the model that they put together in Excel, and it was kind of depressing. But the fact that this exists is just, I guess it shouldn't be surprising. Like, we have the National Spelling Bee and lots of other very silly type of competitions, but this one kind of it hits the tops for me.
I don't know how you guys do it, honestly, because like I have absolutely zero patience for operating in Microsoft Excel. I can barely make two columns on a table. I have zero the formulas, forget about it. Can't even do math on that thing.
Tucker, it's no different than the look that goes over my face when you guys start talking about odds in football.
That's
right? Like both of our eyes glaze over and we both start drooling in the exact same way because we have no idea what the other person's talking about.
I assure you that those are much easier to pick up. I assure you that the betting odds are much easier to follow than Excel, which just seems limitless in terms of what you can do with it. Having a roommate post-college who was a CPA at the Big Four, what he could do with Excel blew my mind away. I have really basic functionality when it comes to it.
I don't get it. So how do you win? You just make a nerdy formula, like more than the other nerd? I don't get how this really works at all.
Yeah, I don't know if it's like, perhaps it's similar to figure skating where there's a 3-judge panel that, holds up the numbers. It apparently lasts 30 minutes, 3 30-minute sessions, high drama, hexadecimals. I don't know exactly what the goal here is, presumably to solve some sort of formula or display.
And there's an actual audience. There's an actual audience to observe this.
Why wouldn't there be, Tucker? This is exciting stuff. All right.
Vegas, baby. Vegas.
I'm going to go spread some sheets after I'm done with this show.
It also seemed as if there were some scoring errors here, too, where at one point, and I don't really know the scoring system that cold, not being a big fan, but at one point a score jumped from 75 to 515 and then back to 75. False alarm.
Well, Paul, you're just getting on the conspiracy theory bandwagon here of the Microsoft Excel Championships. I don't think we can go down that path. That's all the time that we have for today's Financial Exchange. Big Fed meeting tomorrow, and we'll be back at it for the rest of the week. Have a great day, everybody.